A growing chorus is warning the next stage in the bank crisis could be freezing your bank account to save dying banks. As Luke Groman put it, that they, quote, chain the theater doors shut before lighting it on fire. A few weeks ago, flamboyant money manager Hugh Hendry was on Bloomberg warning that continuing floods of money out of bank deposits and into money markets could drive the Treasury and the Fed to lock people into their banks, adding, quote, I would recommend you panic. Meanwhile, Isabella Kaminska, a former editor at the Financial Times, tweeted that since we've now discovered that banks apparently don't hedge interest rate risk at all, which is now killing them, regulators may conclude that the only way to stabilize the banking system is to bring back bank frictions. Frictions here meaning make it difficult or impossible to withdraw your money. Kaminska predicts, quote, the next big thing in fintech will no doubt be friction tech or smart liquidity or whatever dumb thing they decide to rebrand lockups as. The background here is that since March, the Fed has become obsessed with such friction, putting out paper after paper worrying how fast bank runs have become. What took weeks, even in 2008, now takes days or even hours. The subtext is that the Fed would very much like to slow down or stop withdrawals. Saul Omarova, who was a Biden nominee as a top bank regulator, despite being a Marxist, even advocated setting up direct individual accounts at the Fed, which would effectively nationalize the entire U.S. banking system. Of course, with a CBDC, it would all be push button easy to chain the theater. Freezing assets, even seizing assets, can be done with surgical precision in real time. In fact, the Fed specifically cited bank run risk in their paper on CBDCs last year. But even our existing banking system has all these powers thanks to the Bank Secrecy Act of 1970 and the infamous Patriot Act, which delivered full ability to control where your money goes or does not go. Canada displayed that power last year, locking hundreds of accounts for supporting peaceful protests. Our government has the exact same tools, and they could be deployed in a bank run. So what is next? Since the founding of the Fed, Americans have been used as a piggy bank to bail out the banking system over and over. We are currently in the middle of one mother of bailouts, consisting of trillions in deposit guarantees paired with cheap loans on hidden bank assets that lost value. The problem is that all those bailouts don't actually solve the problem, which is that depositors are fleeing 0.2% bank accounts and moving their money to 5% money markets. That literally removes the money from the bank, which forces them to sell those crap assets, which breaks the game. That means the only solution is to cut rates. In fact, to slash them towards 0.2%. This the Fed cannot do since it knows inflation would soar, which would drive Congress to take it over. So the Fed is out of options and the last man standing is you. Final point on de-dollarization, capital controls would obviously also hit foreigners, who would also be locked in, losing access to their dollars. A supposed global reserve asset that you cannot withdraw would obviously be catastrophic for the US dollar's already draining reserve status. Okay, we'll be watching. See you next time.